We're live, we're live, we're live. This is going to be a quick live just to follow up on a couple of stocks that I had promised for a few subscribers. This is A Promised Land by Barack Obama. Costs $25 on Amazon. Hardcover. This one I'll be adding to my book collection. Welcome to the live. Today is Sunday, November the 29th. It's about 1:17 in the morning. Stocks never sleep. Okay. This one is a research for subscriber Free My Grandma. Free My Grandma. Ttnp. First of all, I'm not a financial advisor. I'm not a licensed professional. Stocks are very risky. You could lose money. These are not buy recommendation or sell recommendation. If you make money, please give me credit. If you lose money, please do not sue me, as I do not have fiduciary liability insurance. Okay. Ttnp has a market cap of 37 million. Their revenue is 5 million. They have a quarterly revenue growth year over year of 18.30%. Positive 18.30%. Total cash 4.07 million. Their total debt is 5.34 million. This is Ttnp. Stock I'm researching for Free My Grandma. Shout out to Free My Grandma. Their current ratio is 1.13. 1.13, they're a little above par. ROA, return on asset, is a negative 160%. Their operating margin is a negative 342%. 196 million on the float. 5% of that float are insiders. 3.6% of the float are institutions. Okay. Shorts, 5.22% of the float. Their 52-week range. They closed down 7% on Friday, and they're currently sitting at 17 cents. 17 cents. They're in the healthcare sector. This is Ttnp. Ttnp. This one I would pass. There's nothing to like fundamentally. And this one is a no-go. Ttnp. At least fundamentally. All right. The second stock is for Mike B. Mike B. Shout out to Mike B. The stock is ticker symbol KERN. Kern. Kern closed up 13% on Friday. They're currently sitting at 390. Okay. KERN. Their 52-week low is 217. 52-week high 1350. And their 52-week change is down 57%. The S&P 52-week change is up 26%. Okay. Kern is in the healthcare sector / ganja sector. The market cap is 77 million. Average volume 1.3 million. 12 million on the float. 42% of the float are insiders, 9% of the float institutions. Shorts have 5% of the float. Revenue is 13 million. Quarterly revenue growth year over year, 16%. Quarterly revenue growth year over year is a positive 16%. Okay, their gross profit is 6.36 million. Total cash, 14.26 million. Total debt, 15.63 million. That brings them to a current ratio at about par. Current ratio 1.05. This one is a hold, in my opinion. KERN. Please go ahead and like the video. Okay, really appreciate you. Also, look out for my Sunday stock list later on this afternoon. My Sunday stock list. Third and last stock. This one is for Flash Melody. Shout out to Flash Melody. Jagx. Jagx. They closed up on Friday, 0.43%. Okay. Their average volume is 4 million, and they're in the healthcare sector. Market cap is 15 million. 52-week change. They're down 69%. 62 million float. 14% of the float are insiders. 10% of the float institutions. Shorts as 0.62%. Okay. Their revenue is 8.32 million. This one got my attention. Quarterly revenue growth is a positive 100% year over year. Very impressive. Let me say that again. Jagx quarterly revenue growth is up 185% year over year. Their total cash is 1.35 million. Their total debt, 9.44 million. Current ratio is a lousy 0.42. This one is a pass. All right. Going to be a quick live. Just as promised, I researched these three companies for 3 of my subscribers. If you have a stock that you want me to look at, please email me at davejamaica8@AOL. davejamaica8@AOL. So the Dow Jones closed up 0.13% on Friday. The Dow is now sitting at 29,910. The Nasdaq closed up 0.92% at 12,205 on Friday. Let's see what this week brings. Please subscribe to the channel. Please like the video. Please share my videos. Really appreciate you. Island Gal in the building, welcome. Thanks for all your support.
bottoms print as a direct result of pattern cycle physics. The natural movement of impulse and reaction dictates that two unique formations must develop at some point within each cycle. In an uptrend, a lower high will eventually follow a higher high and mark a new top. In a downtrend, the sequence of lower lows will finally end when price forms a higher low. This second event marks the birth of the double bottom. Double bottoms draw their predictive power from the trends that precede them. Downtrends often accelerate as a series of lower lows prints on a bar chart. The trading crowd notices and develops a gravity bias that expects the fall to continue unabated. Then, suddenly, the last low appears to hold. The crowd takes notice, and bottom fishers slowly enter new positions. Apparent price stability triggers more players to recognize the potential pattern and jump in. Stock percentage growth potential peaks at the very beginning of a new uptrend. For this reason, being right at a bottom can produce the highest profit for any trade. But picking bottoms can be a very dangerous game. Swing traders must weigh all evidence at their disposal before taking the lead, and exercise strict risk discipline to ensure a safe exit if proven wrong. Losses must be taken immediately upon violation of the prior low. Manage risk defensively. Bottoms occur in downtrends. The greedy eye wants to believe the immature formation, and fast execution fingers may bypass better judgment. Even spectacular reversals offer little profit if price can't ascend back out of the hole it came from. Violation of the prior low presents the natural first choice for stop loss. Make certain the entry permits a safe exit for an acceptable loss at this location. Don't stick around long if the uptrend begins to fail. Price will gather downside momentum quickly at broken lows as it searches for new support. Successful bottom entry requires a strong stomach. Highly negative sentiment infects these volatile turning points, even when all SR and other technicals line up. But the profit potential for these classic setups presents very high reward risk. In addition to new longs ready to speculate on a good upside move, high short interest will fuel explosive impulses off these levels. Perhaps for this reason alone, swing traders must explore the secrets of double bottom execution. Breakouts. Significant declines evolve into long basing periods characterized by failed rallies and retesting of prior lows. But as new accumulation slowly shakes out the last crowd of losers, a bear market's character changes. Price starts to rally toward the top of key resistance. Short-term relative strength improves, and the chart may print a series of bullish bars with closing ticks near their highs. Finally, the issue begins a steady march through the wall marked by previous failures. Stocks must overcome gravity to enter new uptrends. Value players build bases, but can't supply the critical force needed to fuel strong rallies. Fortunately, the momentum crowd arrives just in time to fill this chore. As a stock slowly rises above resistance, speed rings a loud bell, and these growth players jump on board, all at the same time. The appearance of a sharp breakout gap has tremendous buying power, but the swing trader must remain cautious if the move lacks heavy volume. Bursts of enthusiastic buying must draw wide attention that ignites further price expansion. The gap may fill quickly and trap the emotional longs when significant volume fails to appear. Non-gapping high-volume surges provide a comfortable breakout floor similar to gaps, but support can be less dependable and force a stock to swing into a new range rather than rise quickly. Markets need time to absorb instability generated by rapid price growth. They pause to catch their breath as both volume and price rate of change drop
Welcome,
sharply.
John Butler.
During these consolidation periods, new ranges undergo continuous testing for support and resistance. To the pattern reader, these appear as the familiar shapes of flags, pennants, and triangles. Relatively simple mechanics underlie the formation of these continuation patterns.
Who won the Tyson fight?
Return to a market's
Is this a promotional gimmick or what?
For a new thrust in the same direction. Price pulls back with declining volume, but does not violate any significant support. The primary trend reasserts itself as stability returns.
Please like the live.
Swing traders must pay close attention to proportionality when examining continuation patterns. This visual element will validate or nullify other predictive observations. Constricted ranges should be proportional in both time and size to the trends that precede them. When they take on dimensions larger than expected from visual examination, odds increase that the observed range actually relates to a broader trend than the rally just completed. This can trigger devastating trend.
Officer John, what's going on?
In which traders base execution on turns longer or shorter than the targeted period. Evaluate all patterns within the context.
What are you watching for this week?
A constricted range exists only within the time frame under consideration. For example, a market may print a
Look out for my stock list later on today.
And a tight continuation pattern on the
my Sunday stock list.
All at the same time. A range drawn through one time frame does not necessarily signal swing conditions in the other periods that particular market trades through.
This light is hot.
Rallies. Wave impulses correspond with the crowd's emotional participation. A surging first wave represents the fresh enthusiasm of an initial breakout. The new crowd then hesitates, and prices drop into a counter-trend second wave. This coils the action for the rising greed of the runaway third wave. Then, after another pullback slowly awakens fear, the manic crowd exhausts itself in a final fifth wave blow-off. Primary wave setups require very little knowledge of the underlying theory. Just look for the five-wave trend structure in all time frames. While these price thrusts may seem hard to locate, the trained eye can uncover wave patterns in many strong patterns. Trading strategy follows other types.
Big chat in the building.
Locate smaller waves embedded within larger ones and execute positions at convergent points where two or more time frames intersect.
MKD.
These cross-verification zones capture major trend, reversal, and breakout points. For example, the third wave of a primary trend often exhibits dynamic vertical motion. This single thrust can hide a complete five-wave rally within the next smaller time frame. Locate this hidden pattern and execute a long position at the third of the third, one of the most phenomena within an entire uptrend. Dynamic third waves often trigger broad continuation gaps. These occur just as emotion replaces reason, and they frustrate good swing traders. Many exit
I
positions.
appreciate you, Chad. Thanks. Please share the video. Please share the video.
Use timely wave analysis.
Put it on your social platforms. I need the views.
It often prints right after several vertical bars close near the top of their ranges. Look for the last bar to reach right into broad resistance.
So I'm going to look into MKD. I think that was one of my play a few days ago. Yeah, Wednesday.
Initiate the sentiment mechanics for the final fifth wave. The crowd
I'll
experiences
check them out later.
setback as this counter trend slowly generates fear through a sharp downswing or a long sideways move. The same
Big up Fernie in the building.
Positions now roll over and turn against it. But as the herd prepares to exit, the trend suddenly reawakens and price again surges into a new wave. The crowd.
Hello, Erica.
During this
I appreciate all the support, Chad and Erica. Thank you very much.
Occur here with great frequency. Survival through the last sharp.
And I'm going to look into your MKD,
builds an unhealthy sense
Chad.
of vulnerability into the crowd mechanics. Movement
This was
comes
Davesplay on
The
Wednesday.
uptrend ends suddenly, just as the last greedy participant jumps in. Highs.
Fernie, what are you watching for this week?
Great rewards in uncharted territory. Stocks at new highs generate unique momentum properties that ignite sharp price movement. But these dynamic breakouts can also demonstrate very unexpected behavior.
I'm hot. I think it's the
SR battlegrounds disappear.
The Magnum wine.
And few chart references remain to guide execution. Risk escalates with each promising setup in this volatile environment. The final breakout to new highs completes a stock's digestion of overhead supply. But the struggle for greater price gains still continues. These strong markets often undergo additional testing and base building before resuming their
EVs are exhausted.
Watch this building process through typical pattern development seen during these events.
A lot of irrational exuberance at this point.
Test the top of prior resistance several times.
And if you overstay your welcome, you will get burned. EV.
Finally surges up. Some issues go vertical immediately.
It has come too far too fast.
New high trade
Be
analysis
careful at this level.
predicting which outcome is more likely. Let accumulation distribution indicators and the developing pattern.
But you know me, I like to ride momentum
Accumulation
until further notice.
Or act this consistently signals whether new highs will escalate immediately or just a moment in time. Price either leads or lags accumulation. When stocks reach new highs,
I cashed in too early on Tesla.
Or buying pressure, they will usually pause to allow these broad forces to catch up. When
I had no choice though. I had to liquidate some of my accounts.
Highs confirms the indicator signal. Odds then favor that the breakout will trigger a fresh round of buying interest and force price to take off immediately with no basing phase.
Please like the live.
Last when a stock breaks to new highs. Physics teaches that the star that burns brightest extinguishes itself long before.
Yes, Fernie, it's good to take profits.
So it is with market values.
Don't be greedy. Always take at least some profit. Take half off the table.
Stocks that struggle for each point of gain eventually give up and roll over.
Oh yeah, KNDI was a monster. KNDI
lies somewhere in between these two extremes. Overbought conditions trigger a decline in price momentum and illustrate one ever-present.
Congrats to you on that KNDI, Fernie.
Stocks may stop.
That was a monster play.
And start extended sideways movement. Watch rallies closely to uncover early warning signs for this range development. The first break in a major trend line that follows a big move flags the end of a trend and beginning of sideways congestion. Exit momentum-based positions until conditions once again favor rapid price change. In this environment, consider counter-trend swing trades if reward risk opens up good opportunities. But stand aside as volatility slowly dissipates.
Oh, you average $7. What's the price now?
Tops. No
Big
trend
supernova
lasts
move.
forever.
KNDI.
Enthusiasm eventually outpaces a stock's fundamentals, and the rally stalls. But topping formations do not end uptrends all by themselves. This stopping point may only signal a short pause that finally yields to higher prices, or it may represent a long-term high just before a major collapse. Learn to evaluate topping ranges by understanding the psychology that drives them. Then, get in the reversal door early and allow the herd to trigger sharp price expansion. Classic topping formations take forever to issue their reversal signals. Head and shoulders and double tops draw complex distribution patterns as the crowd slowly loses faith. While the swing trader waits, the herd takes notice of the
Markets are looking
and
weak.
all stand together to wait for the
That
event.
Dow 30 is not holding.
Since common knowledge offers few good opportunities, access to early warning of trend change provides a needed edge to profit.
Is this the top of the
Every
market?
popular topping formation draws its own unique pattern features, but all tell a common tale of crowd disillusionment. Whether it
We have
involves the
lockdown
loss
in
of faith
effect.
of the head and shoulders
A couple of
or the slow
states.
capitulation of the rising
Is this the
wedge,
top of the market?
the final result remains the same. Price breaks sharply to
Are
lower
we
levels,
getting stimulus
unhappy stockholders unload
number
their
2?
positions as quickly as they can. Value and improving fundamentals.
We need stimulus number 2. We need it.
But the motivation for new participants degenerates as an uptrend progresses. News of a budding stock rally creates excitement and attracts a greedier crowd. These momentum players slowly
Make sure you guys are taking profits. This market could turn
the issue continues upward as
suddenly.
crowd feeds on itself, well beyond most reasonable price targets.
Fernie, you're holding Gril? Okay.
As long as the greater fool
I'm writing it down.
each new long allows the previous one to turn a profit. But the right conditions eventually come along to force a climax to the upside action. A shock event can suddenly erupt to kill the buying enthusiasm and force a sharp reversal. Or the trend's fuel may just run out as the last buyer takes a final position. In either case, the stock loses its ability to defy gravity and stops rising. Many swing traders mistakenly assume bulls turn into bears immediately following a dramatic high-volume reversal. They enter ill-advised short sales.
Shoot me an email at DaveJamaica8 at AOL. DaveJamaica8 at AOL. If you want me to research any stock.
That most topping formations exhibit. Keep in mind that reversals only turn trends.
Okay, Chad, I look into MKD's chart.
Topping patterns must complete before they turn sideways markets into declines. Limit entry to classic fade strategies at the edges of SR until the breakdown begins. Then initiate trend-following short sales to capitalize on crowd disillusionment and panic. Reversals. Most swing traders really don't understand how or why patterns predict outcomes. Some even believe these important tools rely on mysticism or convenient curve fitting. The simple truth is more powerful. Congestion patterns reflect the impact of crowd psychology on price change. Shock and fear quickly follow the first.
2 more minutes on the live. This is a quick live. It's late.
After self dissipates, they continue to hold their positions as hope
Or
slowly
it's
replaces
early.
better judgment. This initial sell-off
However
carries
you want to
further
look
than
at it.
anticipated, and their discomfort
It's
quickly increases. But just as pain
almost
begins to
2 a.m. in
escalate,
the morning.
correction suddenly ends, and the stock firmly bounces. For many longs, this late buying and short
You said MKD's on an uptrend. That's good.
they were right all along. Renewed confidence even prompts some to add new positions. But smarter players have a change of heart.
Chad, the
and view
boomers
this
have it.
rally as
They're
their
coming
first
up with
chance to get
earnings
out.
on the 1st or
They
the
quietly
2nd.
exit, and the strong bounce
Okay.
loses momentum. The stock once again
Dax in the
moves
building.
and draws the second lower top of the evolving.
Please like the live.
Those still hold long positions, then watch the low
Big up to
first
Dax building.
with much apprehension.
Dax, I'm going to write that down.
Prior
TMDI.
to trend lows, draw scalpers and
Please follow up with an email.
double bottom behavior. As price descends toward the emotional barrier of the last low, they step in. and stop
TMDI.
the But the smart money stands aside, and the subsequent bounce only draws in new investors with very bad timing. As the pattern draws its third peak, the last bullish energy dissipates from the crisscross price swings. Price continues to hold up through this sideways action, but relative strength indicators signal sharp negative divergence. Momentum indicators roll over, and Bollinger Bands contract as price range narrows. The scalpers depart, and this final bounce quickly fades. Shorts now smell blood and enter larger positions. Fear increases and stops build just under the double low shelf. Price returns for one final test as negative sentiment expands sharply. Price and volatility then contract right at the breaking point. The bulls must hold this line, but the odds have shifted firmly against them. Recognizing the imminent breakdown, swing traders use all upticks to enter new short sales.
Dax, you're welcome.
Finally, the last positive sentiment dies, and horizontal support fails. As the sell stops trigger, price spirals downward in a substantial decline. Stock charts print many unique topping.
Please help me get to 1,000 watch hours. Please run my playlist on your devices overnight. If you'd like to support the channel,
complex rising wedges will defy the technician's best efforts.
it's free.
While the odd diamond formation,
No money required over here. I'm not selling any programs. I'm not selling anything.
Avoid these fruitless positions and seek profit only where the odds strongly favor the predicted outcome.
Just please share the videos on your social media. And please watch my playlist.
Price draws at least one lower
I
high
appreciate
within
these.
the broad congestion before violating the major uptrend. This simple double top mechanism becomes a primary focus for short sale planning. Use this well-marked signpost to follow price outward to its natural breaking point and enter when support fails.
Thank everybody for tuning in.
The same crowd that
Big ups to Island Gal. Big ups to Fernie. Big ups to Chad. Big ups to Dexter, Dax, and everybody else who tune in on the live. I'll see you this afternoon with Dave's Sunday stock list. Okay. Please set your notification and enjoy the rest of your weekend. I'll see you when I see you. Dave Natch, I'm out. Boom, bam.